Welcome to KoalaGains, and in this video we'll be covering the analysis of the travel, hospitality, and leisure sector, which we call TLH. You can think of TLH as the experience economy. It includes almost every way people choose to spend their free time and discretionary income. Booking a business trip, going on holiday, staying at a resort, visiting a theme park, placing a sports bet, going to the gym, buying camping gear, or spending money on digital fandom and collectibles. For investing, this space is very broad and often confusing. A simple list of sub-industries like hotels, airlines, or casinos does not tell you how these businesses actually behave when the economy, regulation, or consumer behavior changes. We have organized the TLH sector into 5 strategic building blocks. Each block groups companies that share similar business models, economic drivers, and patterns of consumer behavior. This gives us a clearer, more practical way to analyze the sector. These 5 building blocks are travel platforms and membership models, physical destinations and venues, gambling and real money gaming, sports, fitness and outdoor recreation, and the last one is Gen Z digital lifestyle and fandom. The first building block is travel platforms and membership models, which we describe as the, quote, digital front door of TLH. This includes online travel agencies, corporate travel platforms, private lodging and vacation membership models, and specialist or expedition travel operators. These companies act as the connectors of the ecosystem. They usually do not own the planes, ships, or hotels. Instead, they own the customer relationship, the booking data, and the digital distribution channels. Their main job is to route demand into the physical system and to make planning and booking easier for the user. Economically, this block is asset-light and scalable. These businesses invest mainly in technology, data, branding, and marketing. Their value is driven by transaction volume, network effects, and user experience, rather than by the value of buildings or real estate. When we analyze companies in this block, we focus on things like booking volumes, take rates, customer acquisition costs, loyalty programs, and app engagement, rather than property values or occupancy of a single site. The second building block is physical destinations and venues, which we describe as the hardware of hospitality. This covers hotels and lodging, integrated resorts and casinos, cruise lines, and major entertainment venues such as theme parks and large attractions. These companies run the physical locations where the experience is actually consumed. They provide the rooms, the ships, the rides, the stages, the meeting space, and the on-site services. Economically, this block is asset-heavy and operational. These businesses invest in concrete, steel, ships, and large properties, and their earnings are very sensitive to occupancy rates, pricing power, and cost control. They carry high fixed costs in areas like labor, energy, maintenance, and debt service. In good times, when demand is strong and they can keep rooms and ships full at attractive prices, profitability can be very high. In downturns, when demand falls and they cannot easily reduce fixed costs, earnings can drop quickly. When we analyze this block, we pay close attention to utilization, average daily rates, revenue per available room or berth, capital intensity, and balance sheet strength. The third building block is gambling and real money gaming, which we call the risk and reward ecosystem inside TLH. It includes online betting and iGaming operators, B2B technology and service providers that supply platforms, content and hardware, and casino gaming operations inside resorts and dedicated properties. These companies enable people to wager on games of chance or sports events in digital form and in physical venues. Their core role is to facilitate gaming in a way that is engaging, scalable, and compliant with local rules. Economically, this block is shaped by regulation and by habitual consumer behavior. It is governed by strict licensing laws, tax policies, and responsible gaming rules. At the same time, it depends on specific psychology around risk and reward, and often shows different patterns from general tourism. Some types of gambling can remain relatively resilient even when travel slows, although regulatory changes can reshape the market very quickly. When we analyze this block, we look closely at the legal environment, license positions, tax regimes, product mix, customer acquisition and retention, and the balance between gaming and non-gaming revenue for physical resorts. The fourth building block is sports, fitness, and outdoor recreation, which we refer to as the active life wallet. This block includes fitness and wellness services such as gyms, fitness clubs, and boutique studios, as well as sporting goods and outdoor brands that design and sell equipment, apparel, and footwear. These companies provide the facilities, gear, and clothing that help people live a more active and healthy lifestyle. Their core function is to support movement, exercise, and outdoor activity, from everyday gym sessions to hiking trips and organized sports. The main economic driver here is wellness and routine. This block competes for the self-improvement share of the wallet. Gym memberships, yoga classes, running shoes, bikes, and other products that are often bought on a recurring schedule. Demand is shaped by long-term health trends, urbanization, and lifestyle habits, rather than just one-off holiday budgets. When we analyze this block, we focus on membership growth and churn, same-store sales, brand strength, product innovation, pricing power in apparel and equipment, and the mix between recurring and one-time revenue. The fifth building block is Gen Z digital lifestyle and fandom, which forms the identity and community layer of TLH. This includes digital media and lifestyle brands, toys, games and collectibles, and creator-led franchises built around strong intellectual property and online communities. These companies monetize stories, characters, and fan bases across both digital and physical formats. They earn revenue from advertising, subscriptions, digital access, licensing merchandise, in-game purchases, and limited edition collectibles. Their core function is to turn attention and community into cash flows. Economically, this block is driven by attention and IP strength. The more time and emotional energy people invest in a particular world or creator, the more they are willing to spend across different products and experiences. This block captures the shift in leisure time from purely physical travel and offline entertainment towards digital engagement, fandom, and virtual experiences. When we analyze companies here, we examine the depth of the IP catalog, engagement metrics, platform dependency, monetization models, and expansion potential into live events, travel, and physical products. The deeper logic behind these 5 blocks is based on how the businesses respond to economic, regulatory, and behavioral changes. First, there is an asset logic. We separate platforms in Block 1 from destinations in Block 2 because they invest capital in very different ways. A travel app or membership platform invests mainly in code, data, and marketing. A hotel chain or cruise operator invests in land, buildings, and ships. This means an interest rate hike or a change in financing conditions affects them differently. Higher rates raise the cost of building and refinancing physical assets more directly than the cost of running an asset-light platform. Second, there is a regulatory logic. We isolate gambling in Block 3 because it is uniquely exposed to regulation. A change in law can expand or shrink the market overnight. This is not true in the same way for a gym or a standard hotel, so gambling deserves its own risk lens. Third, there is a behavioral logic. We separate sports and fitness in Block 4 and fandom in Block 5 from the travel-related blocks because they reflect everyday leisure and identity, while travel is more often, quote, occasional escapism. People might travel internationally once or twice a year, but they may go to the gym multiple times a week and interact with fandom communities every day. This difference in frequency and emotional attachment leads to different revenue patterns, sensitivities, and valuation questions. This structure serves an important purpose for investors using KoalaGains. By placing each company into one of these 5 blocks, we can quickly see which part of the experience economy it belongs to and what its main risk and return drivers are. If energy costs or fuel prices rise, or if interest rates move higher, our first focus is on the asset-heavy physical destinations and venues block, where ships, hotels, and large properties are sensitive to operating and financing costs. If digital advertising costs increase or platform algorithms change, we look more closely at travel platforms and membership models, and Gen Z digital lifestyle and fandom, where online discovery and performance marketing matter a lot. If a jurisdiction tightens its gambling laws, we focus on the gambling and real money gaming block, because it is directly affected by licensing and tax changes. And if consumer health trends shift, or if there is a renewed focus on wellness, we expect to see the impact first in sports, fitness, and outdoor recreation. In summary, the travel, hospitality, and leisure sector is not just a random list of hotels, airlines, casinos, gyms, and apps. It is a dynamic ecosystem of 5 interconnected building blocks. Travel platforms and membership models control the digital front door. Physical destinations and venues operate the hard assets where experiences happen. Gambling and real money gaming manages regulated risk and reward. Sports, fitness, and outdoor recreation support active, healthy living. Gen Z digital lifestyle and fandom turns attention and identity into monetized communities. By using this structure, we can explain the TLH sector in a way that is simple to understand but still rich enough to support serious investment analysis. And it sets the foundation for the deeper, stock-level work you will see across our platform. Up next, we explore each of the building blocks in detail to better understand the industry.